Hi, it's Steve and Joe from Freshagenda, and Steve, this week we're back with a look at GDT event 289.
Yep.
But a few highlights from our global outlook that went out to subscribers late last week, and of course Chart of the Week.
Let's roll. Okay, GDT 289, highly anticipated event because of a further round of cuts to the availability of whole milk powder and skim milk powder in coming events in the next 6 months. Whole milk the most savage, and you could say savage over two announcements in the last 3 weeks, which has taken quite a bit of product off because of what was called extremely strong demand off the platform.
Yep.
So going direct to buyers. So you can see the anticipation there. The futures prices rode up. You know, the forward curve rode up in the last couple of weeks on that news, and the expectation this would squeeze some buyers in the Chinese market to come to the GDT and secure product, because there is obviously there's a greater feeling about the need for food security in that market as most places, because of supply chains being fragile. But in China there's been a few flare-ups of COVID, and that's probably pushed a little bit more anxiety into those expectations.
And as we've been saying, there's still that pretty good margin between local product and imports. So,
yeah, that's right.
All that together
rolled together. Skim milk powder was similar. The optimism about skim was probably stronger in futures going forward. Slight changes in the availability. So the result was, even though it dragged the index down, that's because of the weight of whole milk powder in the averaging for that index. But welcome news. Anyone with a skim butter exposure would be feeling a little better today. Some good gains in butter. Butter, lifted almost a couple $100. Skim a bit patchy there in the different contracts, but yes, it was overall probably a good result.
So that chart there is showing pretty good demand for skim and AMF in this event.
Yeah,
compared to the average.
Compared to the average over GDT. Whole milk still, despite the fact that volumes are down, was still weaker.
Yep.
And butter just a little bit below average. Yeah. So that's how the forward curves of the main powders look. And the buying, again, we saw Chinese involvement a little stronger than last time, but there wasn't a clamour. I think that's the thing that's a major takeaway. Southeast Asia, I thought that was quite interesting. Looking at that chart there, the buying was the lowest tonnage since GDT started.
Wow.
So we're at the low part of the season.
Sure.
That's a little interesting takeaway. So this idea that buyers are waiting, I'm sure we'll come back to that, because that's something we're certainly seeing in trends in the last few weeks. Fat prices were we saw that margin between AMF and butter come back quite a bit. Butter prices rose. We did see over 8 events or 10 events, I think, a fall of nearly $1,600 a tonne. So pretty strong. So has it bounced?
Has it gained traction at that price?
Yeah, yeah. And we're back to a reasonable level, but still expensive in the markets.
Those price-sensitive markets,
which is 2/3 of New Zealand's exports. So that's a wait and see.
Yes.
So it brings us on to the outlook we mailed last week. So just our outlook, which is a huge amount of work, but just in 2 pages, truncated that back. What most important things is quite a few of them on the demand side, but the supply side ones are probably the ones with the biggest impact going forward. Slowing milk growth in Europe with some tighter margins for farmers and some fairly ordinary weather recently. But the US, we're starting to see that slowdown occur in growth of milk.
Yes.
And we pulled back our expectations of New Zealand based on just looking at what might be possible in different times of the year, and given the strong finish last year. So we're a little bit more conservative on that outlook.
And we've just had some June data, which it's a low production month, but very mixed.
Yeah.
North Island up, South Island well down.
South Island conditions are fairly average. and that's going to take a while to recover. They're usually colder. They're slower out of the blocks. Bit of Olympic terminology there, but they're slower out of the blocks in spring. And if it's going to stay wet, then that's going to hamper that.
Mm-hmm.
So on the demand side there, yep, buyers waiting. Risk of fats being elevated above affordability levels, but the tight Chinese milk situation. Even though it's a supply issue, it's impacting the demand for ingredients, and that there's greater risks about COVID slowing food service, and further down the page, the flare-ups in China, which we'll keep an eye on.
Yep.
So generally what that means when we look at fundamentals, and of course some price movements have occurred since this, which we're reasonably optimistic about the value of skim. We think there's the fundamentals are quite tight.
Still really tight balance sheets, particularly in Europe.
And the EU will drive that.
Yep.
Butter affordability is challenging. The US should pick up, and the US market has weakened even further, so there's more chances of that occurring going forward, of course. Whole milk powder, a bit mixed, but we think, the underlying values of the spine that fat puts under that is still positive. So that should recover, because whole milk powder prices are now well below the synthetic or the shadow values.
Yes.
And weaker whey trade with higher US output will probably pull down the whey complex from here. Righto, close to the end. Jo, chart of the week, what have you got?
Yeah, chart of the week, we're across in the US, and obviously we've seen some fairly strong production numbers and cow numbers over the last few months, but just in the latest lot of data, we've just seen that those culling figures increase a bit. So just looking across to where the growth in cow numbers has been, and it's really been all about filling up that new cheese capacity in parts of the US where that's happening.
Yeah, the upper Midwest has had particularly strong growth. So they're not pulling back yet, but we do see other regions where cow numbers are starting to slow.
And that bottom right-hand chart is part of the reason, I guess. So we've got that pain line, the milk margins below that pain line, so which doesn't seem to move very much.
No, the pain line, I think it's hopelessly out of date. It's been pegged at about US $7.50 a hundredweight. But when you think about the rises in input costs, the inflation that dairy farmers are feeling, the rising labour costs, labour shortages and all that, I'd bet that pain line is a lot higher than that. And that, new plants are pulling through cow numbers, but the longer that stays in such a perilous position, and the projection going forward is not so great. It's not going to move up quickly. So that should slow and see more of that black line being above the prior year in the chart on the left.
Yes.
Okay. Well, that's probably it from us this time. Thanks for joining. We'll be back sometime soon.